Let's start with the Phuthuma Nathi investment, Craig. So this has been a tremendous success for people over the years.
Yep.
Just explain how the two entities, where they came from, and what exactly you get, and whether or not for you it's an attractive investment right now.
Okay, so Phuthuma Nathi, there's Phuthuma Nathi 1 and Phuthuma Nathi 2. Collectively, they own 20% of Multichoice.
Big number.
Big number, yeah. So, it's probably the most successful of all the broad-based PE deals, public share offers that have been done. Came to market at 10 Rand a share. Currently trades at about
157.
Well, there it is. We got the chart. It's come up there. You can see it on the board behind us.
Yeah,
so that shows an on-screen there of 157 Rands. That's the 3-year chart. You can see it's done rather nicely.
Yeah, but what you can't see from there is the dividend flow. So you would have earned close on 40, 50 Rand in dividends.
Tremendous.
From your 10 Rand investment.
So hang on, somebody put 10 Rand in and they've earned 40 Rands over time, and they're still worth 157.
Well, yeah, actually they've earned 40 Rand in the last 2 years.
Wow.
Wow,
so over the term they've earned closer to 60 Rand from the 10 Rand in dividends. Okay, so the dividend actually remains the key thesis behind an investment in Phuthuma Nathi. So because there's no liquidity event expected, and by liquidity event I mean the scheme opening up to all traders or all investors, or Naspers buying them out, or them listing on the JSE, something like that.
So it's expected that it'll just carry on as it is currently. There's no debt in the scheme anymore. You just own what you own, and you earn what you earn. Yeah.
Exactly. So what you typically see is that before the results, the share price will run. The results come out, the dividend is paid, and then the share price retraces. And it's been happening like that for a while.
Right. I mean, Multichoice is Multichoice. We know what it's got. It's got DSTV. You find it an attractive opportunity?
Yeah, definitely. I think this is an attractive opportunity because it's one of the few schemes that no longer has debt. So, and the fact that Naspers has a stake, obviously, in Multichoice.
The other 80.
Yes. And they want all that cash flow.
They want the lolly.
Exactly. So you benefit indirectly from that. That's why the dividend is so high.
What about content costs, though? Because we know that they've been complaining that buying the SuperSport rights and buying the movies and buying the damn Game of Thrones, whatever they have to pay for that, has been rising because of the weak rand, and then you can't always raise your subscriptions that much. Yeah,
look, it's a fairly defensive offering that they have, and they cater for a fairly broad audience. So in our house it's series for the wife, sports and business for the husband, and
just generalizing a bit,
cartoons for the kids. And a lot of the other offerings can't compete with that.
Yeah,
and I saw an article yesterday saying that people will cancel their policies and buy less food before they cancel their DSTV.
Wow.
So it's certainly a fairly defensive business.
And we know that the price of the premium package has been rising. So they've just been writing to their customers saying, look, it's going up because the content procurement costs went up.
Yeah, and box office, I think they've put a lot of video stores out of business. And that, I think, would be a growing...
Plus Showmax, right?
Yeah, obviously there's Showmax. They're going online, and they also came up with saying that they'll be going to more than 200 countries now going forward.
Showmax will.
Yes. So that's good. That's good news. It shows that they want to directly compete with the likes of Netflix and the HBO Go's of the world.
Okay, I just want to talk platform. You can see that chart looks a little bit strange, and that's because it's coming off this Equity Express platform which is used. So my understanding is if you want to invest in this one, you've got to actually go to phuthuma.co.za and you've got to sign up. It's a completely separate process to opening a JSE account.
Yeah, so you've got to go to the website, phuthuma.co.za. You click on register and you open an account. It's fairly intuitive and quite easy to open an account. You'll then be given bank details, you deposit your funds, you go back onto the website about 2 days later and you'll be able to trade.
Okay, my director is reminding me that as per usual on Hot Stocks we would start the little things. So just for the record, if you take the value of the PN1s and PN2s and add them together, you get to about 10.53 billion Rand. That reflects then that the value of Multichoice South Africa is as much as that. And the dividend yield, you've calculated at like 12.5%, 12.2. That's extremely high.
Yeah.
Price to earnings ratio, I would guess if you take the enterprise value and the value of profits that MultiChoice South Africa makes, it's around 6 or 7, the PE. Anyway,
Yeah.
that doesn't really matter. That's just for the record. What you can see here is you're talking about a substantial, ungeared entity with tremendous cash flows.
Yeah, well, you're getting equity-like returns from the divvy alone.
Yeah.
You know, fund managers will be extremely happy if they could deliver 12.2% to their investors on a consistent basis.
So what you're saying is it's time to go hot or not. You reckon this is something that if you are a qualifying shareholder, you'd be mad not to earn, right? Hot.
100% hot.
Right.
I'm hot on this one, yeah.
Excellent. Why not? Let's all be hot today. Next.